All right, ladies and gentlemen, I hope you had a wonderful day. I got another watch list for you, and what we saw today, it was signs of a secret panic. So I have a lot to show you. If you didn't watch yesterday's watch list and you are not familiar with what went down in China and how that's been affecting us, you may want to go take a quick look over at that. But your first pretty picture here, this is the Japanese yen overlaid with the United States 10-year. And, well, the correlation is almost the highest it's been all year. And, well, depending on what happens with bonds in the yen, they are going to feed off of each other. But a lot of people have been saying as long as the bond stays stable, we should be able to see the yen do its work. But now, like I'm saying on Secret Panic, I'm going to get to the yen. But if you got a little bit of experience and you've been following along, this should highlight what made today a little bit more confusing. The Chinese yuan, it's strengthened by a ton, 1.5%, and that is a huge one. So that's one more thing to keep in mind. I'm going to get back to that one. But then finally, shout out to the chat, baby. Honestly, he has like a burner account. I don't know his name, but this was good info. He sent me this here, and what it is the one-day outflows of LQD. That is the high yield or the higher grade corporate higher yield debt. Again, you're going to go look it up. I'm just mixing up all the words, but point is, it's the biggest we've seen in almost 20 years. Today, the global bond, the global yield curve inverted for the first time in like 2 or 3 decades. But this one's interesting, and if you have any ideas, post them below, because honestly, I can't tell you why this happened yet, and coming into the end of the year, there could be stuff, but now tie that into what we saw today. It was looking a little decent. We were actually up a lot more during the futures. I don't know if you were watching that here, but it wasn't doing too bad. We kind of recovered and got back to where we were, but as we started getting into the morning, the bonds and everything else, it dropped despite China bouncing 7%. So actually, even before I get into the keys, that's the next thing you got to realize. And what we had with today, if you go look at like BABA, you'll notice they held up about 5%. And again, if you didn't see yesterday's video, I really encourage that you do. But the whole point here is you got a response from China, and the money moved, the yuan moved in China stocks, but we still don't know the reality of the situation, and that's what started to impact us here. There was news of Apple about to miss out on like 15 to 20 million units. There was news that they were going to reopen. I got fleeced on it, and a bunch of other stuff. So we got a lot to talk about, Chad. I got the keys, the breakdown for tomorrow, the plays we made, and I want to go over what I'm holding now because I got fleeced a little bit today. Even though I realized $1,000, I'm looking at how I'm set up, and I'm very bullish. Even if I don't feel bullish, at least that's what my positions are showing. So we are going to see, but we got all of that. It's going to be exciting. And again, Thursday, Friday, we got big data, and we're going to be there on stream. So hopefully I see you there, but drop your thumbs up on the video. Get all of that in there. And again, I hope I see you. And shout out to the lurkers. Shout out to the real ones, the ones actively in the game, ready to go. Tomorrow is going to be the last day of November, so I hope you're ready, baby. Run it.
Walking to the couch, it's a 20 legs. Live in the hills, but I still get a spread. Started with a live, but I still reinvest it. Feel how I feel, then you feel like it's a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but the sound like progression. Farmer never plans if he waits for perfection. Finger to the down, hold it.
But right off that bat, ladies and gentlemen, today had a lot of reasons to go down. I'm telling you, the Apple news, the currencies. You even had like Ron DeSantis talking smack against China. He even brought up going against Apple if they go after Elon. And then the chat brought this up a lot. There was technical levels, depending on what you were looking at, a lot of rejections. And then on top of it, there was just not a lot of volume. So I think this is the hangover from China. We had a little bit of data sets. And actually, here's a fun fact. If you want to know something about the volume, you had a big United States World Cup game today. And the last time we ever made it this far, and it was like an important game in 2010, the stock market volume dropped 43% that day because everybody was watching the game. So you kind of saw that happen a little bit today, and the volume was below average, even though we came back from the holidays. But on top of all of it, you had other data sets that consumer confidence, it came out today, kind of gave us a little boost because it was negative, but nothing really held. And even there was like Fed data minutes that correlated around the time of the World Cup. I believe that was there. And we got to hear from the regional Fed members about leading into the November meeting. A lot of them were supporting 75, but it was little stuff. Nothing really held. And even the stuff from China that was making people freak out, all the China names still held up, and it was definitely a weird one. So my take on this, I think the China situation is creeping in hard, and the fact that things went up, and specifically that Chinese yuan, like I showed you at the beginning of the day, that made it very, very hard to read things, especially the dollar. I mean, just imagine the Chinese yuan, that is our biggest trading partner, China. So if their currency strengthened by 1.5%, you would think the dollar would be down a lot. And even in pre-market, it was looking a little bit better, but that is kind of what muddied the waters, and we got to see the yen and all of that stuff come up. So I'm going to get to the chart, and I'm going to show you here, but this is what I'm saying. With how weird it was today, we know we got to watch for the data that we're going to be getting Thursday and Friday, and that will be the real driver. But in the meantime, you've really got to keep your eyes out for this China thing, and we don't know what's going to happen. Again, the whole point of yesterday's video, I wanted you to understand that you can look at macro factors to determine if something is going to be bad or not. Am I saying China has to go down? No. If the yen does not reflect that, currencies chill out, they could easily brush it off. But given that some of this stuff happening is borderline unprecedented, if you start to watch the safe havens react, that's going to be your warning signal to say, hey, man, maybe you should pay attention. So I really want you to understand this right now. The phenomena that you are looking for, it is going to be the dollar showing strength at the same time as the yen showing strength. And guess what? We saw it today. Even though the China currency made it harder because a stronger yuan would make the dollar weaker, you still saw the dollar go up, and the dollar going up, it brought down the pound, it brought down the euro, but the yen was the one that was still holding up green today, and it was close by the bell, but for the most part, the yen for 90% of our trading day, it was stronger than the dollar, and I think at the end, it was borderline break even. So keep this in mind. This is what we want to be on the lookout for because, and that relates to what I showed you even with the 10-year and all of that, if there's a problem going on, people are going to go after Japan as the safe haven. And a lot of people have said, well, shouldn't the dollar be a safe haven? Well, it is when you start raising rates and just wrecking everybody and kind of that hot money effect. And this has happened in Japan in the past, but the whole logic is the yen is the Asian Swiss franc. And even in general, when you say safe havens, the yen comes up, the Swiss franc comes up, and then treasuries come up. Those are traditionally what they are. And gold. I got you too, gold bugs. Don't worry. But again, when the Fed is raising rates and doing the dollar and everything else going on, it has been a global inflation phenomena. The dollar has been one of the safest spots. But even then, after the drop, you even see some people are not as bullish on the dollar coming into next year, but we will see. And if any of that plays out, that means the yen is going to shine. But at this moment, we want to look for people to treat it as a safe haven regardless, and that will let you know you got some problems in Asia. So there's a little mini recap, but again, you saw it play out today, but it's moving very slow and other things got in the way. So keep all of that in mind. But now finally, you have Jerome Powell tomorrow at 1:30 Eastern. He has a conference. He will be taking questions from the audience. So it could be big, but at the same time, it also could be a dud. I mean, we did this last week with Bullard, and there has been moments where Powell has came out and really nothing big came out of it. So if he wants to move the Fed futures tomorrow is going to be his last chance before the data. Other than that, if he's mad the market is up, he might use it to be hawkish. I mean, you've been getting a very hawkish tone from the Fed and even Bullard the other day, but don't underestimate the base case here. He's probably going to parrot the same thing that he's always been saying here as to give him that optionality leading into the data as we approach December 13th and 14th and everything else. So keep that in mind. But on the other part of the coin, you're also going to get a huge data dump tomorrow. So 7 a.m. Eastern time, you're getting mortgage applications. 8:15, you're getting ADP unemployment, or employment, not unemployment, excuse me. 8:30, you're getting GDP annualized quarter over quarter, and you're also getting personal consumption, that then GDP price index, core PCE quarter over quarter, advanced goods trades balance, wholesale inventories month over month, retail inventories month over month, and that's all at 8:30 Eastern, hour before the bell, and then 9:45, 15 minutes after open, you're going to get M&I Chicago PMI, and then at 10 a.m., you're getting pending home sales month over month and year over year, and then the JOLTS jobs opening. So that's a lot of data. If you want to know what's going to be more important, jobs, that's it. Again, 10 a.m., you're getting JOLTS jobs. 8:15, you're going to get ADP employment change. The other stuff like core PCE might move, but we're going to get the PCE deflator the next day. And all of the data could move stuff, but the number one priority is jobs data. How does that lead in? And then depending on what we see with real estate, I mean, bad news is going to be good, and good news will be bad news if we see a big decline in homes, or if there's a big rise in homes. That will be no bueno, my friends. So hopefully you guys are ready for it. It's already been a wild week, but now let us get into the plays. So right off the bat, I got a couple of plays, and I'm really excited, and I hope you remember this one. This was my first trade of the day, Yang, and actually what I did, I closed out my TSM. If you remember, that's the underperformer that I was saying I wanted as exposure to everything going on in China. Well, I closed that out. I got like $70, $80 profit, like $1 and change per share, but then I flipped it for Yang because Yang is the China VIX practically, and like I've said, you should remember this because we've played this in the past, and now it's at the same level I got into the last couple of times, and this play is all about the risk to reward. It gives you exposure to China, especially with this situation now, but like when you look at it, the risk to reward is nice as long as you don't go too crazy. So I went with 200 shares. Last time I did like 50 or 100, and you make a couple $100. I think we've actually even made almost, I think it was like $500 on yin or something, and that was with a small amount of shares. So this being a volatility index, it works very, very well, and that's the thing you got to see here. This is what I mean by the risk to reward. I think it could go as low as 11. The last low was $13, but even then you'll see it's been to like 10, 11 by this year, and essentially if China gets bad, this thing skyrockets. As long as China's cool or holds levels, it's going to dump on you. But like I'm saying, I grabbed 200 shares, but the risk to reward, I think if there's only $4 max to the downside before it hits a very, very low bottom, it's a good way to get a lot of upside because this thing could quickly go from 15 to 20 and even go up 100%, which we've already seen it do and we're able to hit already. So I play it small. If you do this with a couple thousand shares, then it's going to be a little risky. And you'll see the plays I did today. And hopefully it highlights this lesson, but that is play number one. Keep your eyes out for that. And then number two, man, IYT. This is the travel ETF, and this play came up the last time we did anything with Yang, so I like it because it is getting us exposure to this whole railroad situation, and in general, if any recession stuff, I mean, energy is kind of helping travel do a little bit better with the costs and all of that, but for the most part, if things get bad or even with economic data, I wouldn't be surprised to watch travel get hit, but just like Yang, there is a decent risk to reward, and again, last time we hit it, I think we made like $700 to $1,000 on it on 50 shares. We got it around here before that last drop in September after Jackson Hole and all of that. So again, with the risk to reward, if it gets up to the highs, that'll take to like 248, 250. That's about $13 or $20. Even if you pull it out, you'll see it can go a little higher. And this is what I mean by watch out for outperformance. But on 50 shares, it's either going to have to run, and hopefully 50 shares shouldn't knock you down more than $500 to $700. That's what I'm keeping in mind. But again, if you go bigger, it's going to be a little different. And remember, none of this is a recommendation. Options trading is extremely risky, and so is equity trading. Please make sure you consult with the financial advisor. No purpose only. Thank you for one day. But yeah, you get it. So I like this one. I think it'll be decent here, and it could tie into any other events, but we will see. But one thing I like about it is like I've taken profits on IYT and Yang, and now I'm just getting back in prices where we're getting this set up right before the data once again, so we will see what happens. But that is play number two, and then finally, oh man, Apple. I got rugged so hard today, man. If you saw it, I'm sorry if you got in on it too, man. It was insane, but it's Apple. So I'm still holding it, and now I'm likely going to use this tomorrow. And they have now been underperforming a decent amount of tech and other assets, and it's because they are the closest link to the China situation. We brought this up earlier today. Yeah, everybody was tripping out about the fire thing in China, but don't forget what happened before. It was Foxconn and iPhone City that had the riots and all the other stuff. They were offering them money. Again, you had that guidance and everything about how many iPhones will be produced today, but they're really in the middle of it, and that's why I think they have been underperforming. But now, with that being said, I think it's going to be a crazy one, and I might even use this to trade, and I made a mistake on it. And I didn't make a mistake. I just went too big, and I hope you guys see it. But this thing, man, even though I went 200 shares when the news came out, but it moves like a giant ES on that big of side. Again, 200 shares of Apple, I don't know, it's like, what, 28,000? So it kind of makes sense there, but it did its own thing, and I think as we respond to the news, we're going to get a lot of this. But what I want you to see here, I need to get my platform up here. You'll see what I'm talking about, but here's the Apple. I lost $700 today. I grabbed 200 shares at 144.57. And now how I got rug pulled, again, and this was just the news, and this is the risk we're going to be taking out here, but there was news that the iPhone, like good news on iPhone City. I got into the wick, and then like 3 minutes later, it just sold off. The news seemed to be old, even though it came out as breaking. And then you had those iPhone stuff and everything, and then it brought it down. So I was down a lot. And this is what I get for going big. And this is what I'm saying. This is where I'm going to have to use this to get in and out of, because it kind of tied me up a little bit today, and I did not like it. And like I'm saying, it's harder to maneuver in and out of this when you go on bigger size, because, I mean, you've watched me do this. I've done 50 shares. Just imagine 200 shares. Well, that's about 4 times bigger. If I just did my 50 shares to scale in instead of going big, again, I was trying to go for a news flip, but you see how that plays out. But if I kept it similar size with the shares and kept it small, again, you can make big money and lose big money on the shares. That's kind of the beauty of it. But this was 50 shares instead of taking a 700. I think I was down like $900 at one point. This could have been a $150 drawdown, and I could have not tied up as much capital, so it could have been a little bit better. So, oh, you guys didn't see that? I had it up here. I hope you saw it. Did I show you? Yeah, I don't know if you guys saw. I don't know right now. I'm just going. I'm hungry, baby. I'm hungry. But those are the main plays. As far as everything else now, man, let's get into the big dogs. These aren't even the big dogs. This is what I did, and oh man, I exposed myself. This is what I'm saying. I don't really feel as bullish as my account is showing right now, and that is something now. If I have an opportunity to get out before the data and rebalance, I will. But if not, then I'm going to be at the mercy of the data. We might be risking a decent amount, and you'll see what I'm talking about. I'm chill with it, and I think non-farms is going to be a huge event. Last non-farms, we made like $9,000 in 10 minutes. It is going to be wild, and again, this is the last one leading into everything, so keep that in mind. But as far as the first play, I cut my ES. This is the short that I had. I used the NQ to balance it out, but I had like 1,100 net profit. I said, you know what? Let me take it. I realized $1,100, but then that means I was holding my NQ, and that one's not hedged. So now that's why I'm holding down 7,300 on that one now. So I got my 1,000. Remember yesterday, 4,000 loss by taking profits and leaving it. It's like, yeah, I'm down 6,000, but I opened up the door to trouble, and I mean, that's the risk to reward. But there was that one. Then there's the TSM, as you see. Closed out of TSM, swapped it out for 200 shares of the Yang, made the Apple, got rugged, closed out my XLV. Again, with everything I was holding, I have a lot of capital on the play. You'll see even what I'm saying. NQ is big, but now with Amazon and Apple, even on shares, these are a little bit too big. And then I've been on the Disney, still got Tesla and other stuff. So I have a lot of plays out there, and I think I will be in need of a readjustment, or hopefully we'll be able to use everything going on. But I said XLV, it wasn't moving too much, and usually this is safer. Took like a $30 profit, got out of that one, and then I shorted the IYT as we were getting a lot more headlines with the railroads and all of that. So those were the only plays we made today. As far as what I'm holding now, I got the micro ES. This is like my only short, and I'm still down on it. This one was from earlier in the month, so holding that one, literally one of my only downside plays besides like Qualcomm, and I'll throw the Qualcomm up here. We're still down on that one too, unfortunately. Here is the NQ, and like I'm saying, I'm probably going to hold this one up until we get the non-farms, but if I don't find a way to rebalance these, again, I went big on bonds and big on a couple of others, I mean, it's going to really, really tie me up. So I may want to trim something before this, but I'm cool with holding this for now, and we'll see. We've had a lot of negative days. We'll see if we could get a bounce, and like we've said, it could clear up some of it. But this one, just keep in mind for the non-farms and the bonds, I was up on this one in the pre-market, and then it shifted really hard. But like I'm saying with the yen, I think these safe havens pretty much, if the market really starts getting crazy from here, I'm assuming we'll get a pop. But again, if people get worried about interest rates or other inflation-related stuff for the Fed, it may make it hard for the bonds. But the thing about it is that if there really is panic out of China, and it really hits, I think the bonds are going to rally with it. So I like the exposure. And then again, the bonds right now are at 3.75 on the 10-year. I mean, if it goes below that, you might get a little flush. Again, it's the same level on the way up as you've seen me talk about it. But there's that one. Holding the Apple, still down. My Amazon, remember, we were up on this yesterday, 200 shares. Came down, so still riding that out. These are my upside plays that I was trying to balance out. Disney, still been holding since earnings and down. This one's not too bad, and the 100 shares isn't as bad comparatively, but still pretty sizable. But holding that one, then there's the IYT and the Yang, and then I still have the Qualcomm. And that one's down $1,300 now, so about $13 a share. And then the Tesla, I am now down $220, and I believe that's about it. So we're going to see. Even though I got to realize the unrealized today, I got washed on it, but I think it's going to set us up for the data. But I do need to find my way to balance. I'm either going to have to take money, take some of these losses and hold, find ways to rebalance. Otherwise, I don't think I'm going to be holding all of this into the non-farms. And I think tomorrow's data dump, I mean, we may see a lot. So I hope you're ready. But that is your watch list, ladies and gentlemen. Make sure hydrate, healthy, ready to go. Make sure post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. I need you to remember, if you go through the fire and come out, you are gold, baby. That's it. That's it. That's all you need to know. If it goes through the fire and don't come out, it's not gold, but you are getting put through all of it. And this is the final day tomorrow of November. Then 30 days, every day at a time, baby. And guess what? Another day, another season. So I hope you're locked and loaded. Keep working hard. You will reap what you sow, man. So I hope you know that hard work, that effort, oh man, in the discipline, the fruit is coming, ladies and gentlemen. So I hope you're ready. I'll see you in the morning, and get ready. And at the very least, you better not miss Friday, baby. So I love you. Drink that water, stay hydrated, stay healthy, and that's it. I'm good. I'm good. You good, bro? It's good, baby. It's good. It's good. I'm not getting awkward again. I'm just hype, baby. Okay, I love you. Horn.